the current financial sector with the previous banking sector is not comparable at all. We did not have at that time the private sector. We did not have the existence of the foreign branches in Afghanistan. And we had few banks with no supervision, with no monitoring, with no modern banking system. But soon after the collapse of Taliban, earlier 2002 and end of 2001, the new thinking of developing the financial sector started. The international community came to Afghanistan. USAID, World Bank, and these multinational institutions stepped in to help and develop the financial sector of Afghanistan. This was one of the commitment in the Bonn conference by the international community as well as by the government of Afghanistan to reform the banking sector of Afghanistan. The reform agenda started with the modernization of the banking sector as well as the financial sector in whole. So we, at the central bank and then the high level, the government of Afghanistan, started thinking on reforming the currency, the banknotes. One of the idea was to omit the zeros from the currency, and then the second idea was, along with omission of the 30, we should have a currency, the rate of the currency exchanging in a rate where it is affordable to the people to import the goods from the neighboring countries and from the other countries, and people have the capacity to buy those goods. So the major partner, the major business partner of the region was considered for Afghanistan, particularly Pakistan, China, India, Central Asian countries. So the exchange rate at that time was decided to something much stronger than the regional currencies. And the new era for changing the currency started. The conversion of the banknotes started. And as I said, there was no statistics of how much money is circulating in this country. And you will not believe it, containers of containers. Money were collected from the market. And against those, the new banknote currency was put in circulation in the market. And people accepted that. Confidence over the banking sector started. In 2002, earlier 2003. So now we started thinking on developing the banking sector. The banking sector that we inherited in the past with very limited deposits of not exceeding $70–80 million. And with a modern central bank, where we should have a framework of an independent central bank responsible for the monetary policy and for the supervision of the banking sector and for the settlement and payment in Afghanistan as well as in abroad. So there was a huge discussion. We ended up with an agreement with USAID that they will help us, they will provide the funding, and they will provide the technical expertise. In terms of the expenses, they will be covering all the expenses for the technical part and for the operational part of the independent central bank. Second, they will help us on developing the new banking sector, both in terms of the technical part, the practical part, the operational, and as well as the regulatory framework of the banking sector. And third, they will be helping us in developing the payment system. So there was and the fourth area, they will help us to build the capacity of the Afghans that ultimately, end of the day, they will be responsible for running the independent central bank and for monitoring the financial sector, which includes the banks, the non-bank financial sector, and the payment systems. And then the contract or the agreement was signed between the government of Afghanistan and USAID. Experts came to Afghanistan. The study started on the current infrastructure. Our primary objective was the price stability in the market, where the inflation will be within a range acceptable and affordable to the people of Afghanistan. The second objective was the financial sector, supervision of the financial sector, monitoring of the financial sector. And the third objective was the payment system, the settlement of the accounts within Afghanistan and outside Afghanistan. And for achieving these three objectives, we developed two sets of law, as I said, central bank law, the banking law. And it was presented to the cabinet of Afghanistan at that time, and was issued under the degree of the president, the transitional government at that time, and the new financial sector, the new era of the banking sector in Afghanistan started. We started evaluating commercial banks, developing the balance sheet for these banks, the balance sheet that meets the standards of the IFRS, standard of the IAS, International Accounting Standards. So it took us months to develop a balance sheet for these banks, and finally we concluded that these banks are not able to meet the basic standards, the basic requirements of our new banking law, except few banks. There were 3 banks who were able to meet the minimum requirements: the Bank Emili, Pashtani Bank, and Export Promotion Bank. Meanwhile, we started discussion with our neighboring countries, globally with other countries, that the environment for foreign branch in Afghanistan is open. There is a framework that they can participate and they can come and open their branches in Afghanistan. We also offered the banking license to the private sector. The private sector can invest in the banking sector of Afghanistan, and they can have banks in Afghanistan. And luckily, very soon we were able to receive certain application from the private sector, including license application for the foreign branches, and we were able to develop the business plan, the projections, and the bylaws, the corporate governance structure, all these for those 3 state-owned banks. With the help again of our international partner, we reviewed all the application of the foreign branches, of the private sector, and the state-owned banks. And meanwhile, we started developing our internal procedure, regulations, policies to license these banks. So the basic policy as per the banking law was developed. The basic policy was the procedure for the licensing of the banks. The 3 category of the banks that I categorized: the foreign branches, the state-owned banks, and the private sector. And the capital requirements were the corporate governance requirements. All these were laid down. $5 million, equivalent to $5 million initially, was decided to be a paid-up capital for the bank. And luckily, we were able to complete the review of these applications, and finally we concluded issuing licensing to the foreign branches, to the state-owned banks, and to the private sector. And the banking sector, the new banking sector in Afghanistan started. Now, second stage that we wanted to move. There was a lot of need for the commercial banking services in Afghanistan for the following reason: the existence of the international community, the troops, the foreign troops in Afghanistan, the NATO troops, the US armies, and then the infrastructure development in Afghanistan itself, because we started from the scratch. We started from the zero, so there was a huge demand for the banks in Afghanistan. So now the priority was to link all these banks globally, including the central bank. So looking for the correspondent relationship, having the Afghan banking sector equipped with the technology where it can function and provide the basic needs to the people. So the new system, the software, all these were developed. We were able to find globally the correspondent banks, and the banks, the accounts were opened, and then the services gradually started. When we licensed the foreign branches, because there were no framework at all, and they were coming every day and asking what we should do. What is your capital requirement? What is your reserve requirement? What is your asset classification methodology? What is your liquidity requirement? And the answer to us was no, because we did not have this framework and people were not familiar with all these standards. So our response always was, look the region, whatever is in the region, that is our practice. And go ahead and check the region. The most interesting story was that amongst the bank, when you open a bank, the practice is that it takes you 3 to 5 years to reach into a break-even. In Afghanistan, most of the banks, but the first bank, the National Bank of Pakistan, they were able to transfer all the initial capital that they brought from the shareholder within their 1 year of their operation. 1 year of their operation, they were able to transfer and pay back their shareholder whatever they brought. So this was the most interesting story for Afghanistan. Now you can see how much potential was in this country. After 2001, early 2002, Monetary Policy Department started. It was formulated, it was established, and the objectives were assigned as per the central bank law, the new objective. And the monetary policy was responsible for the price stability in Afghanistan, to keep the exchange rate stable and inflation within the range, again affordable to the people. But to do that, or to achieve that objective, they had very limited resources and they have very, very limited instrument. We discussed on those resources, on those instruments, and concluded that our primary instrument that we will use to keep the exchange rate stable, to keep the prices in Afghanistan stable, was to conduct the foreign currency auction. And the reason again was that through this we will be managing our money circulation in the market. What we did, we were offering the foreign currency to the market and we were collecting Afghani from the market. And this was another way of fulfilling the demands of the expenses of the government through the budget of Afghanistan. That means the permissible limit that we had in terms of issuance of the money, within that limit, whatever an extra demand was coming, we were fulfilling that demand by conducting foreign currency auction. So that department was developed, the foreign currency auction mechanism was developed, a software was developed by the international community, and they helped us on that. We developed a software, how to conduct the foreign currency auction, who can participate, who cannot participate. So another objective on this was that to allow the Hadawal, the MSPs, the money services provider, so that they come under the umbrella of the central bank for the supervision purpose, and the incentive that we offered that, okay, only those MSPs can participate in this foreign currency auction who has license from the central bank. So one way it was an incentive for the MSPs, for money service providers, and the other way it was an expansion of the mandate of the supervisory mandate of the central bank to license them. And on the other hand, it was a need for the government of Afghanistan to respond to their demands on giving the enough liquidity needed for the expenses of the government from the budget. So with all these objectives, the mechanism of foreign currency auction was developed, the software was developed, and we started offering foreign currency. And then gradually we built up on this. We come up with another idea of the capital notes or the bonds that the central bank issued, because the Ministry of Finance was also developing gradually, and there was a long way for the Ministry of Finance to issue the bonds, and those bonds will be purchased by the central bank from the market, and still that's in the pipeline. But this stage, in order that we to have another instrument of offering it to offer it to the market for our sterilization of the currency, as well as for the financial sector, there they have the channel where they can invest their Afghan currency, and where we can create a demand for the Afghan currency, for the trust of the Afghan currency, and where we can give an appropriate returns to the market. So we introduced the capital notes, and we offer the capital notes to the banks with a certain range of the interest. So banks started coming, investing in the Afghan currency. People started investing in the Afghan currency. So the current account, the saving accounts were opened in the banking sector for the Afghan currency, because people started realizing that there is a mechanism, there is a system functioning behind the Afghan currency. It's not that currency which was in the past issued by warlords, and there was no system of controlling, monitoring. Now people have realized that. So we opened that, capital notes was issued, and then gradually again we built upon that, and we developed a secondary market, procedures, mechanisms where not only the banks but also the non-bank financial institutions can participate in the bank, in the capital notes or in the bonds of the central bank. And these bonds can also be offered to the money market, to the open market, to the ordinary people, and they can invest on those capital notes. So the monetary policy was expanded, and within this 14-15 years, we were able to keep the currency stable, acceptable, and the exchange rate was stable compared to the region. We do have issues, we do have limitations. We are a country still dependent on aid. All these are limitations of in a reality of the Afghan economy, but it is also a reality of Afghanistan that in this region, Afghani is the most stable currency, and we have been able to prove that the central bank was able to adopt appropriate monetary policy to keep the currency stable, to keep the prices stable, where people can trust on that. 2004, we, with the help of the FENSA, the US FIU, IMF, and our USAID partner, which was a bearing point, we started to develop our financial intelligence unit responsible for collecting the reports from the financial sector, the large cash report and the suspicious reports. So we developed the financial intelligence unit. The financial intelligence unit was gradually linked with the multinational government FIUs, and we also became member by the passage of the time of the APG, the Asia Pacific Group, and we became observer at the ICRG, International Review Group, and we were member of the Financial Action Task Force. When we became member of all the institutions, the basic requirement for the membership was that we should have a framework. 2004, we developed two laws for the financial sector. One was the anti-money laundering law, and the second was the combating terrorist financing. The initial draft was developed with the consultation of our partners. We tried our best to reflect the best international practices in these two laws. The two laws were based on the standards provided by the FATF. At that time, the standard was 40 plus 8 recommendations. So all these 40 plus 8 recommendations was reflected in our two laws. And then our two laws were adjusted with the legislation of Afghanistan, with the laws prevailing in Afghanistan. And based on these two laws, the presentation was made to the cabinet of Afghanistan. In 2004, these two laws was gazetted and again was issued under the decree of the president. By the adoption of these two laws, we were authorized to expand the function of the financial intelligence units. So the financial intelligence units got the membership of all the international organization, and we became active members of sharing the information, coordination, and working with the international organization. I remember that the foreign branches and the private sector, they were almost every day coming to our offices asking for different questions. What is your large exposure? What is your is per capita limitation on the lending side? What is the liquidity requirement? How should we give us the report? What should we? These were common questions to all the banks, but every bank was individually coming to our offices. And meanwhile, we had a lot of work to do, a lot, because the banking sector was new. We licensed these banks with the basic requirements for licensing, but we need to develop the reporting requirement, the liquidity requirement, the reserve requirements, the classification, as you mentioned. All these regulations need to be developed to have a set of the prudential requirement for the banking sector, which we did not have. And the idea from the USL came that you should have an association of the banking sector where the common concerns, common questions, and the common issue, either from the central bank being a supervisor or regulator, or from the commercial bank, these should come and be communicated through a single mechanism. So this will save us our time, save their time, and then it will be a one unit of communication and coordinating between the banking sector and the central bank. So ABA was established, the bylaw was developed for the ABA, and then there was a mechanism for having their board of management. So the chairman was elected, it was not selected. So the election was among the banks. There was a chairman, deputy chairman, and then the mechanism of establishing communication, all this started. And we realized that it helped us a lot in communicating and awareness and understanding the common concerns of the bank and communicating our supervisory roles, all the new policies when we were introducing, the new regulation when we were introducing, any orders that we were introducing. So all these were communicated through the ABA, which was a very good coordinator, and their role on developing the financial sector was impressive. In 2011, we reached into a stage where the banking sector was developed. The financial sector was much more developed. Millions of customers were having accounts in the banks. The presence of the banking sector was all over the country. Globally, we had big banks having relationship with the Afghanistan banks. So we reached into a stage where, in discussion and as well as in consultation with our international partner, we concluded that we need to evaluate our banking sector in terms of the threat from the money laundering and the threat from the terrorist financing. The evaluation of the sector was done by the FATF in collaboration with the International Monetary Fund. In 2011, they released a report on the financial sector of Afghanistan and pointed out certain deficiencies in upgrading our system to meet again the standards, the FATF standards. And those required the anti-money laundering law and the counter terrorist financing law needs to be amended, upgraded. The government of Afghanistan at that stage, to a certain extent, was not ready to accept certain area to be adopted in these two laws, and the international partners were pushing. We reached to a stage where we got a warning from the FATF that if Afghanistan do not adopt the recommendation of the reports released by the international organization, the IMF and the FATF, the Afghanistan financial sector could be blacklisted. The central bank started working very closely with FATF, ICRG, APG, with our other international partners, including US Treasury. And they started helping us, how can we avoid the blacklisting of the financial sector, the new financial sector that we started. The sector that has a lot of achievement, the sector which is a hope for the people of Afghanistan. And every single meeting of the FATF, ICRG, APG, with the Treasury and with other stakeholders, the central bank attended to show our commitment of our central bank that we are ready to adopt all these standards. Interestingly, what happens, when we went to the meeting in Paris, to the general meeting of the FATF, the ICRG, and we were just 2 days away from the blacklisting, that Afghanistan will be blacklisted. I kept calling from Paris to Afghanistan, to the President's office, trying to convince that these two laws need to be adopted. We kept calling Parliament, both the upper house and the lower house, that if once the President signs this, they should help us call an extraordinary meeting and adopt them. And luckily, the President called an extraordinary meeting of the cabinet. Both laws were adopted, and on the same day they were sent to the Parliament. We called on the Parliament. So I was in contact with the Parliament from Paris. Meanwhile, the President made a phone call to the Parliament to call on an extraordinary meeting. Interestingly, when the cabinet approved these two laws, the 2 remaining days that we were away from the blacklisting and our holidays in Afghanistan, in Parliament even they were off. The Parliament was called, both houses, and they approved the proposal of the government of Afghanistan, the 2 laws. Now, these 2 laws have to come back to the President of Afghanistan for the signature. And again, all these are 2 days. So luckily, the Parliament, and then through the Parliament to the Ministry of Parliamentarian, and then to the President's office, he signed it, was gazetted, announced, and then we went to the FATF that this is gazetted. And I presented the degree just 1 hour before the voting. The presentation was that this was published in the newspaper, that these 2 laws were gazetted. The FATF did not accept the newspaper. They said we need the degree that the President has signed. And that degree should come through the formal channel. The formal channel is that the Afghan embassy in Paris should endorse it. And we have only 1 hour from the blacklisting. We called the President's office again. And it was off here, but they managed to send the degree via email to me. And then we asked our embassy, before that we asked our embassy to be ready for endorsing it. Embassy brought all those stamped there. We're waiting for the email. When email came, they stamped that in their office, and we presented. And Afghanistan was not blacklisted. So this is how it happened on avoiding the blacklisting of Afghanistan. In fact, it was an effort of the central bank. And in fact, it was the central bank who managed to coordinate between the Parliament, President of Afghanistan, and the international community, and make an understanding of each other, and finally we succeeded on avoiding the blacklist. With all the challenges, with all the issues that we had, another challenge and issue for the central bank, for the government of Afghanistan, and for the people of Afghanistan was that we migrated from one system into another system, the new modern system, the new conventional banking system, and we are linked globally with the financial sectors of the world. But now we need to have our own capacity, our own people to run the system. The foreigner will not be forever with Afghans. So we need to have our own people trained. We have to have our capacity, our expertise to run this system. So we started focusing on this as well. And this started along with all those reforms that the government of Afghanistan started in 2001. Capacity building was one of the critical part. And we were able to sign the agreement with the regional central banks and with the other central banks, including the US Treasury, including the USAID and IMF, and they were providing the technical assistance to the central bank, to our employees. When we started, I remember in our central bank, we had one computer, but we did not have a person to operate that computer. Now, we have Afghans who are running the banks, we have Afghans who are heading banks, we have Afghans who are CEO of the banks, who are CFO of the banks, who are CCO of the banks, and who are COO of the banks. Most of the senior positions they are heading. And it's those Afghans who are trained by our international partner. And this continues to go on. On supervision, we had a time where our consultants were examining our banks. We're developing the examination reports by advisors, consultant, and there were more than 10 advisors in supervision of the central bank, more than 10. Now, we don't have a single one. On and off, we do get the advice and consult, but we don't have a resident advisor. We don't have a resident person who goes with our team to examine the banks. So the capacity on both sides are built up, and it still continue. On the commercial side, we have CEO, most of the corporate governance, most of the management of the bank is run by the Afghans. On the central bank, the Afghans, the examiners, all of them are Afghans, including myself. I was trained by them. I started as an employee with the central bank, and they have trained, they spent on me, and they have sent me to many various international trainings organizations, and I ended up with being a deputy governor and the acting governor. So it was all because of those trainings, capacity buildings, and it continued. It will continue because I benefited from that, and I've seen the benefit of the training and the capacity building, and this is what I'm going to transfer it to my other colleagues to benefit the same. So it will continue. Starting from the Camel rating, how banks can be rated, what is the methodology of the Camel rating, what is an offside reporting, how to do the analysis of the offside reporting, how to do the calculation of the risk-based approaches, and how the banks can do the analysis of a loan application, the assets classification, the liquidity requirements. All these trainings were conducted and still continue. Dealing with weak banks, developing the enforcement actions for the weak banks, reform at the weak banks, corporate governance of the banks, crisis management. These were the most critical training that we very recently conducted. We had the people who were familiar with that communist type of banking, not with the modern class, the conventional banking sector. And we reached a stage where we wanted to reform our financial sector. We need to have people who can run the system, which we did not have. So it was the international community who took the responsibility of building the capacity of the people, modernizing the system, linking the financial sector, expanding the sector, making sure the sector operates securely, immunely, and there is a proper examination going on, there is a proper reports developed and generated, and there is a proper services provided by the banking sector. All this was done by the international community. So in short, if there were no international community, we would not have been able to develop the financial sector. We started exactly from the zero and reached to a stage where we have a current modern banking sector. We are globally linked. We can transfer small money through Western Union. We have SWIFT, the global infrastructure for the payment system, the big amount. We have our existence all over the country. We have the immune financial sector. We have our IFA financial intelligence units linked globally. We are a member of the international organizations. We are a member of the multinational organization, and we have created an image where people can trust us. People have confidence over the banking sector of Afghanistan. To give you an indicator how much people has trusted on the new Afghan currency, is that we started, the total currency in circulation was about 30 billion Afghani. All the currency circulated that we converted and exchanged it with other currencies. So 30 billion Afghani was circulating. Today, in 2016, more than 200 billion Afghani circulating in this country. On the customer side, there were in 2001 not more than 100,000 customers. Now, more than 2 million customers. Now we have 15 banks operating in this country. When we started, there were only 3 banks in this country, and those were not in fact banks. Now we have 15 banks. Now we have presence all over the country. There is not a single district where there is not at least 2 banks, 2 branches of the banks in their districts. Now we have a payment system where we are linked globally, both for small amount of money transfer and for the big amount of money transfer. We have SWIFT and Western Union. We have a system for the internal transfers. Previously the transfer was physical. Now there is no need for the physical transfer. There is a domestic settlement system between the banks and between the central bank and the banks. We have Islamic banking that we didn't, being an Islamic country, we did not have Islamic banking in our 5,000 history of this country. So this is the first time that we have the Islamic banking product, we have the Islamic banking system in this country. We've been able to have appropriate supervision of the entire financial sector. We are linked globally. We are member of the international organization. We have been able to have both in the banking sector as well as at the central bank more than $12 billion now of the reserve as well as of the total assets of the bank, that once we did not have even altogether not $600 million. So these are the biggest achievement, and now we have the monetary policy which we did not have in the past. The payment system, as I said. So these were the biggest achievement that we have been able to achieve during these few years. And even beyond that, now we are working on the financial inclusion strategy for Afghanistan. The financial inclusion strategy will include the mobile payment. The mobile payment will not be limited only to the salary of the government, but it will also be a mechanism of settling all the dues, all the payment through the mobile, whether it's a utility bills, whether it's an expenditure, whether it's a salary by the government to its people, or whether it's a transfer of money by the people to its relative or to its family. So the impact is much impressive. We have noticed it. Once upon the time, the target was the district. Now with the financial inclusion, with the mobile payment, the target is every single home. So every single home should have that facility. Everyone from his home should be able to pay, to receive the money, to send the money, and to pay the dues, utilities, whatever they want. So this is the ultimate goal and the target, to reach into every single home through the financial sector and bring them into the banking sector of Afghanistan, include them in the banking sector of Afghanistan. One way and another way, the mobile payment will be another revolution to the banking sector of Afghanistan. And I could see the sign of those revolution that we have noticed and that I've seen. I've gone through that in 2001, 3, 4, and 5, and 6. I see the same indication in the mobile payments. This is what we had and this is what we have now. So it's not at all comparable with what we have and what we had in the past. There were 3 stages for the reform of the banking sector. The foundation was one, and then there was an expansion of the banking sector, that was second, and then there was a facility, awareness, and relationship of the banking sector. I think you said FIDA project was impressive on developing the framework where the business community will have access to the finances, where the awareness of what the banks can offer and what the business community can get from those products, and ultimately those products, and a group work or a teamwork between the two will ultimately lead into the development of the economy, was a critical role that USAID projects, FIDA, has played. They've been able to provide different programs, and they've conducted a very critical program on bringing the central bank, the regulator, the commercial banks, the financial sector, and the business community together so that they can work in the developing of the economy of Afghanistan. So where we can extend the framework not only to a corporate banking but also to retail banking, where we can where the bank can extend credit to the microfinances, and where they can generate the employments. So the USAID FIDA project was also critical on helping us to develop the framework on Islamic banking, the training that they helped us to coordinate with our international partners, to conduct the orientation program for the banks in terms of the framework of the regulators. So I think it was critical, and there is still need for that program to continue. The future of the banking sector and financial sector in Afghanistan is a bright future. I'm optimistic. Once upon a time we will have to expand our banking sector globally. Our banks will be able to go abroad and have their branches in other countries. I'm optimistic. We have started gradually exiting from the cash-based economy into the system-based economy. Our banks will be able to not only generate more deposits, but will be a trustworthy institutions for the people to place their money with the banks, and those money can contribute in the economy of Afghanistan. These institutions will produce talent not only to the Afghanistan but also to the other countries. Looking into the current capacity, techniques, and approaches that we have adopted, I'm certain very soon we will be able to stand on our own feet, and all the banks will be run by the Afghan. We will have our global linkages, we will have our global presence, and we will have a financial sector where most of the needs of the people of Afghanistan, Afghanistan government, will be fulfilled from the banking sector of Afghanistan. And this banking sector will help us to be less dependent on foreign aids, and this will help the government of Afghanistan to be a contributor of developing not only economy but in the entire other sector in the country, including the security. So I see a very bright future for the finance sector of Afghanistan.